The Fibonacci of Dow Jones that you said that it doesn't have a past, you told us to remind you to explain that. Okay, so you see Dow Jones. I have told you this before, but I'll repeat it. You see, Dow Jones in this kind of a trend, you see, it has, we have a Fibonacci in here. In the past of the chart, you see, you need to look for a reverse. That is a big reverse, a Fibonacci reverse. And this is the last swing high in the trend that has been between this tide here. This is our last swing high, and we've had the main ascending movement here. So, if we draw a Fibonacci from the swing high and low, we have some Fibonacci levels after 100 level that are useful in these situations. For example, you see that 261 level is a very powerful Fibonacci level that if the price collides this level for the first time, it is going to reverse, certainly. And they're very powerful points. You see, for example, in 161, sometimes, and I'm saying sometimes, it's not certainly, it doesn't happen all the time, but sometimes it reverses on the first collision. But sometimes I see when the 100 level is broken, when we don't have a Fibonacci, the the price goes straight to 261 level. And when that breaks as well, we have another level above that that I can't really show. It's this one, 423. And this is the maximum level you can use Fibonacci with. And you see that we couldn't draw the normal Fibonacci chart here. But now that we have drawn here, the main ascending trend has been started here. So we draw Fibonacci and we use these numbers that are up here. And in this situation, we can talk about Dow Jones when the price goes higher than the 261 level. And this resistance is very powerful. You see, the first collision certainly is certainly a reversal, but it can't go higher than this, further than this easily. And the pullback is 161. That's going to build new tides. So if you see that we have a reversal to 161, we have a resistance here that I don't know that is 227. You can draw the Fibonacci while I'm talking for yourself. You can see we have a resistance here, and that's why we had a reversal. We had the resistance in this zone that caused the reversal. But here it has formed a new Fibonacci. It's this Fibonacci. Because it has formed a swing high and it has reversed a bit. And we can draw the Fibonacci from the swing high to swing low. And this is the midterm Fibonacci. And we have another tide here. So this is the tide, but the main midterm Fibonacci is this. But I advise you to draw a long-term Fibonacci because it's a big wave. So you can know the resistances. You see, 38 is overlaps the pivots and also the 11 level Fibonacci. I mean, it's not well adjusted. It should be there. Now it's better. So your Fibonacci 11, it's the swing low pivot here that has a resistance. But generally, in a trend that we don't have a Fibonacci, you can draw it like this. You always have a trend in between the trend. So if I want to draw this in the tide that we have here, no, that wasn't right. We can't draw the Fibonacci there. So this counts as a trend, a fluctuation. So always between these fluctuations, we have a big reversal, for example, like here. That when you draw the Fibonacci, you're going to use the numbers above 100 level. And there's another thing related to the trend line. And let me remember what it was. We draw the trend line reversed from high to low. Excuse me, you haven't taught us about the trend line, right? Yes. You see, if you want to draw this, the price has a pivot here, and I wasn't paying attention to this, and I had opened an order here. But if you draw it like this, to this swing high, let me see if it's right or not. Yeah. So there has been a very powerful pivot here that has caused a reversal. Let me fix it. We've had a very powerful resistance here. And you see the sudden reversal? You need, based on this wall, we had a trend line here that has caused a pullback. And I will teach you this later. So generally, did you understand what happened here? Yes. So when the market doesn't have a reversal, we can use Fibonacci and trend line, right? Yes. Fibonacci and trend line and a mix of the central trend lines. And also we can use candlestick method for sure. And I think that the Dow Jones is going to retrace in this swing low. It's approximately this wall that is going to touch. Excuse me, the price action the same as candlestick strategy? Price action is a new name. They have mixed up some tools like candlesticks and pivots and trend line and also Ichimoku and some other indicators, and they have called it price action. So you see, price actions basics goes back to pivots, but sometimes mixes candlesticks and pivots. That's not right because that it is going to have many errors. So you don't approve of it, right? No, not at all. You see, a price action is a mix-up of trend lines and Ichimoku and also candlesticks and pivots. You see, years ago when I wanted to do white labels and SFX broker, I was working with that method. So the basics are candlesticks and pivots, but because it was a mix-up of all of these things, it would confuse you. I used it for a while and it wasn't working well. Or maybe I couldn't work with it, but I don't know. I don't really approve of that method. Because indicator method is not a has delay and it doesn't really work. It has a lot of delay. So and if you're a fluent in candlesticks, you can trade based on that, based on this. I've had recorded videos before that I let me show you in a on a chart. For example, on this, the swing high, I would start to trade on here. So if you're fluent in um, candlesticks, you can trade on these charts. If you're more professional. You see, I haven't worked on this for a while. So I can't, but I can't say what, I can't predict what's going to happen next. You see, we have a swing low here, so it's going to come up to here. So if you are fluent in candlesticks, you are going to predict the market very well. But I'm not trading as much as I did before, so I don't know. Let me show you on 5 minutes. You have a lot of loss here. You have lost a lot. It, no, it's going to come back. You see, I said I'm not working on the market that much anymore. I used to be on the market 24/7, but now I don't really work on it anymore. You see, the target here and here is they're very far apart, so it's a long-term trading. But if I have time to work on the market, for example, let me tell you about the candlesticks because they have rules and they're always the same. For example, we don't take orders on these candlesticks because they are 50-50 candlesticks. If it opens this zone, it's going to go up to the next pivot. But let it be completed so I can tell you better. Excuse me, yeah, every problem and question that you have is going to be solved in candlesticks subject. For example, this candlestick has to fill this gap here, and these are rules. You can be sure that these are going to happen. But as I told you before, I'm not working on the market that much anymore. And I'm not a trader anymore because a trader has to be on the market 24/7. But if you take orders and you just abandon the account, that's not what a trader does because some fluctuations might happen in the market, and if you're not online on the market, you don't see those fluctuations. So I'm not good for trading anymore. You see, this candle is going to come up to here. If I will teach you about candlesticks and you will learn it. These are not the main things that you need to learn. You see, you have a wall here that you can buy, you could have bought. This is a very powerful wall here and a very powerful resistance. So if the candlestick gives us an ascending signal, I should buy and I shouldn't be afraid to buy. So if you're trading, you should be online on the market to see every fluctuation. But don't worry, I will teach you all about these. So what was the next thing I wanted to talk about? I told you to remind me to tell you something. I don't remember it now. If you remember, please tell me. So, okay, so I talked about normal pivots, and I'm talking about the swing low pivots or dent of the valley pivots. So, the first pivots that you have on the market that you have very collisions with in the daily market were swing high pivots. And the next pivot that is more powerful than these pivots is swing low pivots, which is in this zone. Can you see them in the swing low zones? For example, this zone and this zone. Let me highlight them with the blue color. I'm going to highlight all of them, both swing lows and highs. And they're all important. No, when you have an uptrend, the swing low that we have here is important, and if it's a downtrend, these are important. You see, if we have an uptrend, these are the ones that are important. If they are in the swing low, if they're formed in a swing low. Excuse me, there are many times that these swing lows are not a point and they're in a zone. No, I will tell you about that later, about how to identify the swing lows. So these swing lows are the same as the overlap this Fibonacci level 78 and 89. They're the same. Let me draw the Fibonacci. You see, where is 89 level? It's right here. You see the swing low here. It overlaps the swing lows. And also the 78 level. You see the swing low here? You see that? You see, I don't know if you have learned this before or not. So when we have a 61 level and the price is above 61 level, for example, in this zone, you should sell immediately because it has little fluctuations here. And the second candle has been completed above 61. And when you see the breakout, the price is going to hit 89 level or 78 level. But in 89 or 78 level, you can trade freely. You see, for example, let me go to the past of the market. You see, this is the end of the 78 and 9. Let me draw it for you. When it comes up to here, it's the end of the first swing low. You see this is the reversed V shape, and this is the end of the trend. Let me show you on the chart. When has the price reversed? Imagine we don't have this part of the market. So ignore that part. So if it, you see the price has gone further than 61 and has retraced at 78. And 78 level is the same as the swing lows. Let me fix it for you so you can see it. You see, this is the swing low. When the first collision of the price is with the 78 level and the price of the candlesticks is formed in the swing low, you can take orders freely. And I'm talking about the first collision, not the second or third, because the first collision matters. So this is the past of the market, and this happens a lot. But since I've learned about the swing low pivots, they have helped me a lot in my trading. When I draw Fibonacci here, when do I put the take profits on 61 level? Because I have pivots here. I can say that 50% or 60% of the trend that has been declined has to be reversed. So the reverse that we have here is up to the 50 level. We have fluctuations here because we've had a very powerful pivot in this zone. So if this has broken 50, it's going to hit 61 level. But if the 50 has been broken and hits 61 level, what happens? It is warning you that your trend is going to be an uptrend. So when it hits 61 level, let it come down, let it retrace to 50 level, and when it does, you should start the buying process and put your take profit on 78 level, because it's going to hit 78 when it breaks 61 level. And when do we consider a breakout? When you have draw the Fibonacci level in a 24-hour time frame, if your pivot has been broken in that time frame, you can start a buy order because it's going to hit 678 level. When have I put my take profit on 61 level? You see, it has had many fluctuations, but I've had my take profit on here. I could have gained my profit here and exited, but I wasn't online on the market. But why have I put my take profit on here? You see, we've had a reverse V shape here, so this is a V shaped here. So you shouldn't be afraid because it's a rule. Excuse me, there are many times that the V shape doesn't form completely. No, these are rules. No, you see, the V shape forms, but not completely. Yeah, that's because we've had a small reverse V shape before that. They're equivalents. You see, you're looking at the market now. What are you saying? You can consider this big or small. You see, I consider this as a V shape, and after that, as a reverse V shape, and then a V shape again. You see, we have all of these V shapes and reverse V shapes here. It all goes back to how you consider them. When I'm looking at the market here, I don't consider these small fluctuations. I'm talking about these big V shapes here. You see, this is a very big V shape. This doesn't count as a V shape. This is the past of the market. If you see any V shapes that haven't been formed completely, show me. Excuse me. In the center of the market. Yes, exactly at that point. Please, a little to the right. Yes, exactly this. So this is the second leg of the V shape. So how big is this? You see how small it is comparing to the other one? No, they're you see. Can you see the V shape here? This is what I consider a V shape. You see the first leg of the V shape is very big here. No, it doesn't make any difference. You see, wait, here we have a V shape here. Can you see it? This is a reverse V shape. That's where you're wrong. If if you are considering this whole reverse V shape, you should consider this V shape completely too. But if you are considering only this small V shape here, then you should consider the small V shape that is next to it, but not this big one. When you're comparing them, you should compare them equivalently. You shouldn't compare a big V shape with a small reverse V shape. That's what Fibonacci 89 level is for. If you draw your Fibonacci, you see that the pullback is on, the retracement is on 78 level. 78 and 89, I repeat, 78 and 89 are at the dents of your V shapes or reverse V shapes. The swing high or swing lows of your V shapes or reverse V shapes. Can you see them here? 78, and this is my V shape, and this is the swing high of the V shape. If this is my general V shape, this is my reverse V shape here. But you see, this is a practical matter. I've memorized these because I've seen them a lot. And because you haven't memorized them yet, you should work with Fibonacci, and Fibonacci helps you. So remember 78 and 89 level. You see, that's what happened here too. You see my 78 level here. I will highlight it for you. And the end of the second leg of the V shape is going to be exactly here. But you need to memorize these. I can't really explain them. This is your only criteria, the 78 and 89 level. This is my reverse V shape, so this is my V shape. So consider 78 and 89 level. This is the only way I can explain it, because it is not really explainable. Did you get this? Yes. Okay, I will repeat it one more time. Whenever you have drawn a Fibonacci, the end of your reverse V shape or V shape overlaps the 78 and 89 level of Fibonacci. I have seen this to be considered as 78, 76. And it's 78, not 61. Because it doesn't work with 61. But it's a practical matter. When you look at the chart, don't look at the fluctuations. When I was a beginner, I would do that. But then when I got more professional, I just look at the center of the chart and I look at them and I know what's going to happen. I've memorized them. I don't mind the fluctuations anymore. There might be 10 little fluctuations here. I don't care. This has to be at the reverse V shape here. When your previous tide has come up to 78 level, your next tide is going to reach 78 level as well. So when you're comparing the V shapes and reverse V shapes, please compare the small ones together and the big ones together as well. But always remember 78 and 89 level. If you want to consider 50 or 61 level as the end of your V shape or reverse V shape, that can only happen under circumstances that you have a very deep swing low on that zone. For example, like this. But that's not happen very often. So you can only say that this is the end of your V shape or reverse V shape, and I am putting emphasis on this. You can only say it on the circumstances that you see a very deep swing low here. The first collisions are always mean always a reversal. You you are going to have a reversal, whether it's just one candlestick or one trend. You see in here it has the first collision and it's going to reverse one candlestick or one type. In 78 level, the first candle, you see it has reversed. So always consider the first collisions. You are going to win in your trades if you are stuck in the market. I shouldn't doubt it, because 89 rarely breaks. You see this? The 89 is overlaps the swing low, and in the first collision it has reversed. You see in here too. The first collision it has touched it and came back. So when your 89 level breaks, you see these are important points. When your 89 level breaks, don't expect it to retrace on 100 level all the time. Whether the 100 level is on the top or the bottom, it's going to go a little bit further than 100 and then retrace. Unfortunately, I've seen in books that if the price hits 100 level, it will retrace. But it's not true. When 89 goes further than 89, you can be sure that it's going to hit 100 level and it's going to go a little bit further than 100 level and then retrace. It's going to form a base here, and it's the same in the uptrend as well. See, I am drawing the Fibonacci, and the price has broken the swing low here that was 89, and here that the 89 has been broken. You see, it has to be broken, not rejected. If that happens, it can be sure that it's going to reach 100 level and come back in this zone. It's going to come up to here, a little retracement, and then a reversal. And it has to. It's a rule. It has to form a swing low higher than this swing high here. Excuse me, a swing high higher than the swing high here, and then come back. Because technically these shapes have to be matched together. Let me show you on another part of the market. For example, in here, it has gone further than 100 level. It has come a little bit lower than 100, also in this as well, and then it has retraced. So is this, can you know how much exactly it's going to go further than 100? Yes, you can say that by Fibonacci numbers, but I don't know what the number is. I think it's 127 or something. Yes, it's exactly 127. So yeah, I'm not sure who it was. Was this Mr. Muhammad? Yes. Yes, please put the Fibonacci numbers on the group. Please send it on the group. Okay, I will. You see, it is going to come down to 127 and retrace. But don't think that it's going to reverse at 100 level. And I've made this mistake many times. I would open a buy account here and put the take profit here, and I would lose a lot. But later I learned that it's going to come a little bit further than 100 level, and it's going to reverse after that. And you can see it in other parts of the chart. You see, these are considered as swing lows that has to be completed lower than each other. You see, this is a very deep swing low here. So it's not like that the 100 level always retraces. You can see it in here. You see, let me find the Fibonacci. One Fibonacci is here. Let me draw this first. Excuse me, there's a possibility of retracement at 100 level, right? Yes. For example, if you look at the first two swing highs, yes, we also have it here. I'm talking about the retracement, the general retracement, and the end of the trend. When you draw one here, it hasn't retraced in 100 level. I'm talking about the long-term trends and overall trends. See, the trend has ended here. It has touched 100 and it has reversed, and it has been over below above 100 level. Don't mix them up together. When you're taking orders, you need to identify which kind of order it is, if it's a short term or mid term or long term. But if it goes further than 100 level and retraces above 100, that is the end of your trend, end of your tide. But if you're talking about short term trend, short term tradings, you can take orders on 100 level and you can gain profits and exit the market. But don't expect it to be the end of the trend and the tide. And you can understand this based on the pivots again. But I will teach you that later too, about why it reverses above 100 level, because we have more general tides here. This is just the basics, but I will teach you that later again. So after these pivots, we have swing low pivots, which are the most powerful pivots. Is that clear? Excuse me. Um, you see, how do we identify the swing lows? Based on Fibonacci. You should draw the Fibonacci, but it's practical. Let me look at this for a sec. Sometimes we have many swing lows and it confuses us. Yes, I know. You see, for example, let me look at this first and see how I can explain you in a way you can understand it. You see, the first thing that you can use is Fibonacci numbers. These two are very, very important. When I'm drawing Fibonacci myself, I'm only looking at 78, 89, and 38 level. And I don't look at 50 or 61 level that much. These three levels are what matters to me. It's 38, 78, and 89. One of these three always overlaps a swing low. For example, if your 89 level is here and your 78 level is here, and it doesn't overlap a swing low, you can be sure that you haven't drawn the Fibonacci correctly. Because sometimes the price comes up to here And I look at the 78 level and I see a swing low here. So I won't even mind these shadows anymore. And I look at 89 level here to see where it is. And you can see, let me highlight it with a line. I see a swing low here. And in the past of the market, you have a pivot. These overlap each other. And I know that the price is going to touch these points. If you don't want to make any errors, I do this myself too. If you look at my chart, you see that I have put the take profits a little bit lower than Fibonacci levels because Fibonacci is not very precise. Put your take profits a little bit lower and you can exit the market, the trade freely. Sometimes it doesn't collide with the Fibonacci's because the resistances were so powerful that it has shocked the price and it has caused a reversal. Why did you put your take profits here? Based on what have you done that? Why didn't you put it on the swing lows? Didn't you say that 78 and 89 levels are very important? Yes, you see, the reason why I've done this is because that my final targets are 78 and 89 levels, but it depends on what kind of candlesticks I have here to see if I can consider 89 or not. If I have a swing high at 78 level, that is my maximum. But the reason why I've put it on 61 level is because I have a pivot here. So I will exit on 61 and then enter again on this zone. So I will risk a fluctuation here. I will, when I have an uptrend here and my overall trend has changed, I'm never going to exit on 50 level because I've had a reversal. Because I've taught you this on swing lows. I have an ascending signal here. So if I exit on 50 level, you see, I may have many fluctuations here and I could gain a lot of profits, but I didn't because and I've put my take profit on 61 because I know the 50 level is going to be broken because the swing lows have been changed. So at the first collision with 61, I will exit and then buy again at 50 when I get a signal from a candlestick like this and this and this. Because I have a signal, so I will enter the buying process and I will put my target here, not 61. If you pay attention, I have entered and exited a few times here on the first collisions, and I've taken some orders from the swing lows. You see, I always exit on the first collisions. Excuse me. Um, we had been confused before. Yes, because I do this on the first collisions. Maybe 2 days ago or a few days ago, I lost an amount of money. I put a sell stop here, and it broke the pivot, but it reversed, and it got rejected, so I lost money. That's because I put a sell stop here again. But I will teach you about that later. You see, when it's the first collision, you should always exit. 80 or 9% of the time, the first collision means a reversal. And I will exit so I don't lose profit. I will exit and then I will put a buy stop here. But generally, uh, these are swing low pivots that overlap the 78 and 89 levels of Fibonacci. You see, the higher these numbers, the more powerful. The 89 level here is very powerful. Sometimes the end of a trend has been caused a spike to 61 level. So this is a very powerful level. Is that clear? Excuse me. Can you repeat that, please? What should I repeat again? I just entered the class, and can you please explain again? Okay, I will explain it for you. But don't worry, I will send you the video of the class. Okay, so after the candlestick pivots, the most powerful pivots that we have are swing low pivots. And I look at the trend to see if this pivot has been broken. The next pivot is swing low pivots, and I can identify them like this. You see, I have one here and one here, but this is not a swing low because it's inside the trend, but I have a swing low here. This zone is very weak, and this is another swing low pivot, another one here, and also one here. After, you see, when this pivot has been broken, if I don't have a candlestick pivot or a shadow pivot here, I know that the price is going to reach the swing low pivot, and these are the most powerful pivots after shadow pivots. Okay, so we can say, as we had said before, which pivots are more powerful, which shadow pivots are more powerful. You see, in 4-hour time frames and more, not in hourly time frames, in 4-hour time frames or more, if they're in a row, they are more powerful. Sometimes the pivots are so powerful that before a price reaches them, it causes a very huge reversal. It shocks the price. So you should pay attention. These two are in a row. These are swing low themselves. And the pivots that are in a swing low, and there are more than two, they're very powerful. Don't let the price to touch these pivots, because before the price touches the pivots, it will reverse. So you should exit before it touches the pivot. But if it reaches these points, and you see that the price is stopped here, maybe it stopped for an hour, you can know that it's weakening the pivot. But we have some pivots that are so powerful that before the price even reaches them, they will cause a huge reversal. But you should do as many trades as possible so you can master this. I would repeat again, if the price is ascending, before it reaches this pivot, I will exit. Then I wait to see if the price reaches this point or not. If it does, if it reaches the shadow, you'll know that it's weak and it's going to be broken. And after that happens, you can enter again. But sometimes there are pivots that are far away from this pivot. So you see some fluctuations. That means that the pivot is very powerful. So you should exit immediately. Don't wait for it to reach the point. I advise you to take notes and know that you should exit before it reaches the pivot. You see in here, these are my pivots. Is that correct? These are my pivots. And the price has reached 50 level, but it hasn't been able to reach these pivots. So this means that clearly these pivots are very powerful. So it has been stuck in 50 level for days. It has shocked the price, and it has caused the decline. So these are very powerful pivots, and if they are broken, if the price here is opened, we're going to have a spike, an upward spike. So if if this trend is open here, I'm going to work with big lot sizes because my main pivot has been broken. So pay attention to these points. If you should exit before the price reaches the pivot. And you can do that in scalp orders as well. You can sell and then exit. But if you see a price is moving and it reaches and it touches the pivot, you can be sure that that pivot is weak. It's going to be broken in the future. And that's why the price has been able to touch it. If you have these pivots, you shouldn't keep on looking at these numbers or these zones. You should look at the past of the market to see how many pivots you have in the way. One here and three, four, no, just the three. You've had many reversals here. It means that you've had pivots in the past. So you've had 3 or 4 pivots. So you should keep this in mind that, and don't be greedy. Keep the pivots in mind. And even if these pivots here are broken and opened, you can open a buy order and then identify where the swing lows are. For example, one here and here and here. Also this one. These are very weak because they are formed inside the trend. And this is not even count. This doesn't even count as a swing low pivot. You see, where we have swing highs, swing lows, you see, where we have swing highs, below it we have swing lows. And 78 and 89 is a very great criteria for you to identify those swing low pivots. Let me give you a key point here. The swing lows here have been moved. And this is the resistance here. This resistance doesn't want the trend to change. But it is going to be broken at the end. Maybe today or tomorrow it's going to be broken. So don't be afraid. It is not going to decline. Your swing lows have been moved, and this is going to gives you an ascending signal. You have to get the confirmations. Also, you have a trend line here that has been updated. You see, the neck has been open. The 50 level of Fibonacci. You see, we have a first collision. Then the trend is changing. And because it's the first collision, that's the reason why that it's resisting. Don't be afraid. You put your target there. I can close this trade right now, but it's going to reach there because the swing lows have been moved. And I have a weekly confirmation from the candlesticks. And because I have a reverse V-shape here, that means that I'm going to have a V-shaped trend right here. So these are all your confirmations, and these are all the rules that you should comply with. These are the rules that I've talked about so many times. So the price has reached here, and you may get a selling order, and you shouldn't risk now. It doesn't matter if it has some fluctuations. You know the market elasticity is ascending. You know it's going to go up at the end. If you sell here, there's a possibility that it will go up and you will lose. So you shouldn't do that. Comply with the rules. If I have a reverse V shape, I'm going to have a V shape, definitely. You should look at the swing lows. If the pivot has been broken here, the next one is here. And if it breaks again, this is the next one. These are our swing low pivots. And one here, we have one here that is weak, so I'm going to have a small reversal before 78. And then it's going to decline again and go up again. Is that clear for everyone? Any questions? No, thank you. All right. You see the tides here that have broken the 61 level Fibonacci have reversed at the swing low pivots. Even if you consider the bigger wave, that's the same in that too. You see, let me find a point where the 61 level has been broken. I don't have any points in this chart. Let me change the chart. You see, for example, in here. Let me delete this. Okay. Alright, so in here. I have a trend line. Never forget about the strategies that I teach you. Always remember all of the things that I've taught you. So I will draw the trend line. I have one here and another one here. So pay attention to what I'm doing. Let me adjust that. Okay. So I have I have opened an order with very little profit. The price has collided with this wall. So I will open a buy order with a very little take profit because the wall is my trend line. If the trade goes wrong, I will lose very little because the price was close to the wall. So I will draw Fibonacci here. And we've had a reversal at 50 level, then 11. We have reached 50 again, then another reversal. So we have two pivots here at the top and low part. So imagine the price goes up. You see that I have put a take profit below 61 level. Or I will put it here. Before this pivot. Because I don't mind these 3 or 4 pips here. Because maybe the pivot is very important, or I have a candlestick base here. So I know that when the price collides this for the first time, I'm going to have a reversal. You see, I am repeating. First collision is what matters. The first time it hits it. I will exit, and maybe I will open a sell trade here, but that doesn't matter. I have a pivot here. It's going to come up. You see the 78 level. I have a swing low pivot here. So I will exit at 78 level because I have a swing low. So I can open an order with this with a very high take profit, but I should exit at 61 level because it's the first collision. If this breaks as well, if 61 level breaks as well, then you can consider 78 or 89, and you should also still look at the wave. And it's the same in the euro chart. For example, so this is a reverse V shape, so I'm going to have a V shape here. And I'm going to have a swing low there. It's going to end in a swing low that is lower than the other one. You see, we have a swing high here that is lower than this one. Because you see that all of the swing highs are lower than the previous ones. And that's the rule. That's what's going to happen. Let me show you on another chart. For example, in here, the price, here we have 5 pivots here. So the price is going, if the price goes higher than, goes further than this zone of all of these pivots, at approximately this zone, that's a complete breakout. You see, I've had pivots here as well. You should enter at breakout points. You should stock the market. You see, if it breaks this zone here as well, and let me draw the Fibonacci. Where is 78? You see, I have a one swing low here at 89 level. So this shows me that I have drawn the Fibonacci right. So I've had a reversal from 61 to 11, then it goes up again. And if it breaks it again, I can expect this zone. This in here we've had a reversal at 61. I've had an open closed candle and another one here. So the next pivot is an open close one. So you see how strongly it declined. As soon as it touched the open closed pivot, it declined. So these are more powerful than the swing lows. Okay, let me show you another chart. In here, we've had a reversal in here. At this point exactly. This is a swing low. So these are very powerful. And at the first collision, we're going to expect a reversal. If the candlestick gives us the confirmation and gives us a swing high, you can buy freely. And you see that I have bought here. And now that is going up, this zone is important for me. This swing high is very important for me. If I draw a Fibonacci, I will understand it better. You see that? It overlaps the 89 level. So I have another pivot here and here. So in here, it's going to go further than this, and it's going to give me a rejection pivot, a rejection shadow. and then it forms a shadow and declines suddenly. If it goes further than 89, so these are a very important points. Memorize this. If it goes further than 89, don't say that the pivot has been broken here, because you have a swing high here and there's a possibility that it will reach here and then decline suddenly. So pay attention to all of these points. Always draw the Fibonacci. There's a tool that draws the Fibonacci automatically in every time frame. It draws the Fibonacci, and one of my friends has that tool. Remind me to send you the tool. It's good for people who have problems in drawing the Fibonacci because it draws it automatically. I have it and I will send it on the group. Yes, thank you so much. Can you add numbers on it? Yes. Yes, you sent it to us. Well, you couldn't add numbers to that. I don't know. That only has 38 and 50 and 61. Yes, exactly. No, there's another tool that one of my friends had that tool. I will ask them to send it to me and I will send it to you. For example, in pound dollar chart, you can see that it's going to go up and it's going to reverse in here. Let me draw the Fibonacci. On 78 level, around here. So we'll give you a reject signal around here. You're going to have a reversal at this zone. You see that it's going up beautifully. And you can understand from the power of the candlestick that it's going up. So it's going up gradually. You see the step way trend. But these are one of our most powerful pivots that overlap the 78 and 89 Fibonacci levels. Is that clear? Excuse me. So you see that which one is more powerful, open close or swing low? The most powerful pivots are open close pivots that happen usually close to 89 level. But I will teach you that next session. So any questions? Excuse me, I have a question, but it's not related to what you taught us. About open close pivots, should we consider the opposite ones? For example, like the fractals that are the opposite direction? No, that doesn't it doesn't really matter. The important thing is that the open close pivot should be in a line, in a row. And I will teach you that the next session. I will teach you about open close pivots the next session. They're really hard to find. For example, in here, the open close pivot doesn't really matter because you have one open close here, but it doesn't count as a pivot. So these are a little bit hard to find. We have another one here at 89 level. You have one here. And another one here. Also this one. It forms on swing highs. But I will teach you about that later. First, learn the swing low pivot. So, I'm asking you a question. swing are were swing high pivots useful for you? Yes, very much helpful. I've always had problems with when to exit the market, but with this strategy, I'm so much better. I'm doing so much better. Excuse me, the Euro CAD chart, we have trend line and pivots. Yesterday, let me, I don't actually work on Euro CAD, but also the Euro USD last week. You see, the last swing low that it had formed in 4 hour time frame went up. Yeah, it's going to reach here to complete the V shape. Yes. This is the weekly time frame. It is more visible in 4 hour time frame. Yeah. Okay. So someone has said that, can you show us some more swing low pivots at the end of the class? Okay, I will. So swing low pivots, for example, in here. Whatever you count as a swing high, we have a swing low below it. When you draw a Fibonacci, 78 and 89 level overlap the swing lows. For example, I have drawn a Fibonacci here, and I have a 78 level here. This is my swing low pivots. In the gold chart, when we have an uptrend and it breaks 61 level, if I don't have any more pivots in the way, you see this is the last pivot that I have in the way. When it breaks it, the pivot is inside the reverse V shape. When I look at the Fibonacci chart, I see that the 78 level overlaps the swing low here. So this is the final pivot of this tide that's going to go up. But it's not going to end. The first collision will cause a reversal and a decline to downward movement. And this one too. If the 50 level is broken, I have these pivots here, and I will close the trade on this point. And after that, don't mistake this as pivots. These are not pivots because they're inside the trend. So I will exit here. I have one pivot here and then one above that, which is the 78 level. And the 78 level has an equivalent swing low pivot. I have another swing low above that. That probably my 78 level is going to be broken and reach 89 level. So if you want to draw the trend line as well, you see these angles and they should be equivalent to these. So if the trend line has been broken in here, you see that it's going to go further than these points and break these. So to sum up, you have, if the price collides these swing lows for the first time, you should sell for a short time, for 10 or 30 pips. It depends on the market. Take a sell order and take your profit and exit. So the swing low pivots are inside the reverse V shapes, and we can consider them when the shadow pivots have been broken. For example, in here, I don't have any downward shadows here, so the next pivot is the swing low pivot. Excuse me. So you mean that if we have a swing high pivot, we don't consider the swing low pivot? No, we do consider it. Because you see, in this situation, this is equivalent to your swing high, to your swing low pivot. You can have a pivot like this next to your swing low. No, I mean, if we have a swing low pivot below these. No, that doesn't really happen that much. But you can't say that. We will still consider it because I have swing lows here. I have swing lows in these 3 points. You can still take your orders. You see, my orders, because I'm not on the market very much, I work on long term orders because I have memorized the shapes and I know that it has to complete this shape. I don't really mind the fluctuations. I mind the fluctuations when I'm online on the market and I'm working on the market. But but now that you see I put the take profit here and I haven't touched the trade even though I've had many fluctuations is because I'm trading long term. But you do your own way. Don't look at what I've done. If you want to do a long term trade, you can put your take profit here. But if you're online on the market, you should exit at these points when they break. You should buy when they break. Because you're trading and you're on the market, but I'm not. I do weekly trades. You can't buy unless it has been broken. Because if you do, it will decline and you will lose your profit. So wait for it to break.
استاد یه سوال دارم.
Excuse me.
ببخشید. من وقتی قیمت داره میره رو به بالا و میخوره به
When I have
توضیح
an uptrend
منتظر
and
سیگنال کندلی
it
نباشم
hits the
همینجور
swing low, I
برخورد
shouldn't wait for the
در
candlestick signals anymore, right? No, no, that's right. Wrong. You see, you should get the confirmations from your candlesticks as well because you should do this in order. You see, the first thing I taught you was trend line, and then the swing lows, and then Fibonacci, and then pivots. And you should mix all of these together and use all of them. I have 6 strategies that I need you to mix them up together. You see, when I'm analyzing the market, I'm using all of those 6 strategies. You should never forget about either of them.
سوال دارم. اگر
Excuse me,
برگشتن به
so if
توضیح
it hits the swing low and I don't have a signal from the candlestick, what should I do? You mean if you don't have the signal from candlestick? Yeah, but it will give you a signal.
ولی سیگنال کندلی نداده که من مطمئن بشم برگشت میخوره
But what if
چیکار
I
کنم
don't have the signal to make sure? You see, if the price comes up to here,
خب تمام میشه
the
ولی
candle has to be
سیگنال
completed,
یک
right?
معمولیه
Yes, but the candle could be a non-signal candle. Yeah, but it will give you a swing high or it will give you a full candle or an engulfing candle or it will give you a signal at the end of the day. But these are further discussed in the candlestick subject. You may see that the candle that you have at the moment is giving you ascending signals. You need to know about the signals that the candlesticks give you. You don't know anything about candlesticks now. You see, everything that I'm teaching you are about other things, but I haven't taught you about candlesticks. Candlesticks is a very complex subject, and sometimes it even confuses me. But please learn the basics well and you will succeed. Now I'm telling all of these strategies without candlesticks. If you have Fibonacci and trend line and pivots, if you know all of these strategies well, you will succeed. Trend line, the swing lows, if when the swing lows are formed, are moved, and these V shapes and reverse V shapes, all of them are confirmations that you can get. And when you do your trading based on this, you will be very successful and you will gain profits. I'm putting an emphasis on this. I see that you're all online on the group all the time asking questions, but you're ruining the work that you have done. Please comply with all of the rules. Pay attention to the market elasticity, if it's ascending or descending. If you comply with all of the rules, you will make profits. And when you're working with small lot sizes, you're not going to make much, you're not going to lose much. You see, now that you're online on your markets, you're observing these points. You can put a buy stop here. So when it's open, you know the pivot is broken and it is going to go up to 61. Why would you close it when you're going to gain profits? If you close it, it's a mistake. So comply with all of the rules and wait until I teach you about the candlesticks. I will teach you about them on your third semester so that you'll master all of the strategies. Excuse me, do we have a session tomorrow night? No, you have the day after tomorrow. Any questions?
من یه سوال در رابطه با
I have
سوال
a
دارم اونو بپرسم
question.
یا آخره؟
Is that clear so that I can stop recording the video? Alright, so I will pause the video.